Bitcoin's sharp sell-off to around $84,000 today has sent shockwaves through the entire crypto market. This sudden downturn raises critical questions about the future of cryptocurrencies and the overall sentiment among investors. Looking ahead, the immediate future of Bitcoin rests on its ability to stabilize above the mid-$80,000 region. This critical price point has historically acted as a support level, and reclaiming it swiftly could indicate that today's sell-off is merely a transient reaction to broader macroeconomic pressures, such as inflation concerns and interest rate hikes. The cryptocurrency market has been notoriously volatile, often responding sharply to economic news and regulatory developments. Recent market trends suggest that investors are becoming increasingly sensitive to these external factors, which adds layers of complexity to Bitcoin's price movements. If the downward trend persists, however, the implications could be dire for both Bitcoin and related equities, including companies heavily invested in or reliant on cryptocurrency. A sustained decline could erode investor confidence, potentially leading to a market sell-off that extends beyond cryptocurrency and into other sectors tied to digital assets. This scenario may trigger a reevaluation of investment strategies across the board as stakeholders grapple with the risks associated with digital currencies in an uncertain economic climate. Key indicators to monitor will be Bitcoin's recovery efforts and how crypto equities respond to any further declines. The performance of Bitcoin over the next few days will be crucial in shaping market sentiment. Investors should remain vigilant as the market navigates this volatility, watching for signs of recovery or further decline. The question of whether Bitcoin will bounce back or if we are on the verge of a deeper correction looms large for all stakeholders. As we approach the end of the week, market participants will be closely analyzing Bitcoin's price action, with a particular focus on whether it can reclaim and hold the mid-$80,000 support level. The next few days could define the trajectory of the cryptocurrency market for the foreseeable future. The recent sharp decline in the cryptocurrency market has left investors reeling with significant losses across various digital assets. This downturn can be traced back to a series of events over the past few months, highlighting the inherent fragility of the crypto market. In particular, recent macroeconomic tightening signals from Japan, especially the Bank of Japan's hawkish commentary regarding interest rates, acted as a catalyst for today's sell-off. These remarks not only strengthened the yen, but also exerted pressure on global risk assets, including Bitcoin and Ethereum, which have been particularly volatile. Historically, downturns in the crypto space have been characterized by cascading effects, where the decline of one asset triggers the unwinding of leveraged positions in related markets, further exacerbating the situation. In the current environment, investor sentiment has already been cautious due to ongoing vulnerabilities stemming from regulatory uncertainties and market speculation. The fragility of the crypto ecosystem has made it susceptible to external shocks, and today's sell-off is a culmination of these long-standing issues rather than a singular event. As the market grapples with these challenges, the impact has been profound, leading to significant liquidations and a sharp decline in trading volumes. Many retail and institutional investors are now reassessing their strategies, with some opting to withdraw from the market entirely. Looking ahead, the outlook for cryptocurrencies remains uncertain. Analysts suggest that while this downturn may present buying opportunities for some, the broader economic landscape will continue to influence market dynamics. Investors will need to navigate a complex interplay of macroeconomic factors and regulatory developments as they seek to stabilize their portfolios. As the dust settles, the resilience of the crypto market will be tested in the coming weeks. The recent drop in Bitcoin's price has sent shockwaves through the cryptocurrency market, underscoring its role as a key risk indicator. Bitcoin, often referred to as the bellwether of digital currencies, has seen a sharp decline, driving a reevaluation of investment strategies across the board. This decline is particularly significant as Bitcoin often dictates market sentiment, influencing the performance of altcoins and crypto-related equities. With Bitcoin's value plunging, investors are compelled to reassess their portfolios, leading to a widespread sell-off across the market. This phenomenon has been evident as treasury-heavy stocks tied to Bitcoin have experienced a near 10% decline, raising questions about the viability of the Bitcoin on the balance sheet strategy that many companies have adopted. Understanding the context of this situation is crucial. Bitcoin, often regarded as digital gold, has been a volatile asset since its inception, but recent fluctuations highlight an increasing sensitivity to macroeconomic factors. Factors such as rising interest rates, regulatory scrutiny, and geopolitical tensions have contributed to the current downturn. Additionally, the Federal Reserve's monetary policy has led to a tightening of liquidity, which historically impacts risk assets like Bitcoin. Furthermore, institutional interest in Bitcoin has surged over the past few years, with numerous firms integrating it into their investment strategies. However, this recent price drop may lead these institutions to reconsider their exposure to Bitcoin and the broader crypto market. The impact of Bitcoin's decline extends beyond mere numbers. It can create a ripple effect across the entire cryptocurrency ecosystem. Retail investors, who often follow the lead of larger institutional players, may panic and sell their holdings, exacerbating the downturn. This could lead to a loss of confidence in the market, making it more challenging for new investors to enter. Companies that have heavily invested in Bitcoin may face significant financial repercussions, potentially prompting them to divest or adjust their strategies. Looking ahead, the outlook for Bitcoin and the cryptocurrency market remains uncertain. Analysts suggest that the market could stabilize if Bitcoin finds a support level, but volatility is likely to persist in the near term. As regulatory frameworks continue to evolve and macroeconomic conditions shift, investors will need to remain vigilant, preparing for potential further declines or a market rebound as conditions stabilize. This morning, Bitcoin experienced a significant sell-off, plummeting to approximately $84,000. At 10:30 a.m. JST, CoinDesk reported the drop following the opening of the CME Bitcoin futures market, attributing the decline to hawkish comments from the Bank of Japan. The decline was shocking, with Bitcoin falling 5.7% in a single update, which subsequently dragged down the broader crypto market. Digital asset treasuries, including companies like Bitmine, SharpLink, and Apexi, also saw nearly a 10% decrease. This downturn is particularly notable given Bitcoin's recent resilience despite various economic pressures, including inflation concerns and regulatory scrutiny. The Bank of Japan's comments indicated a potential tightening of monetary policy, raising fears of increased interest rates and a stronger yen. Such shifts often make riskier assets like cryptocurrencies less appealing to investors seeking safe havens. Investors are reminded that the cryptocurrency market remains highly sensitive to macroeconomic indicators, which can shift sentiment rapidly and lead to sudden sell-offs. The impact of this sell-off extends beyond just Bitcoin, as a significant decline in the leading cryptocurrency often triggers a broader market reaction. As seen today, altcoins and other digital assets followed suit, experiencing sharp declines as investors rushed to liquidate positions amid fears of further losses. This reaction underscores the interconnectedness of the crypto market, where Bitcoin's performance often dictates the fortunes of other digital currencies. Looking ahead, market analysts are closely monitoring the potential ramifications of the Bank of Japan's stance, which could lead to a prolonged period of volatility in the cryptocurrency space. Investors may become increasingly cautious, particularly if they perceive that central banks worldwide are leaning towards tightening monetary policies. Such a shift could dampen appetite for speculative investments like cryptocurrencies, as traditional assets may begin to seem more stable and attractive. As we move forward, the crypto community will likely focus on how Bitcoin and other digital assets respond to these macroeconomic pressures. The upcoming weeks will be critical in determining whether the market can regain its footing or if this sell-off marks the beginning of a more sustained downturn. Investors should prepare for continued volatility as economic conditions evolve and central bank policies unfold. As Bitcoin's future hangs in the balance, how will the market react in the coming days? Share your predictions in the comments, and don't forget to subscribe for daily deep dives into the latest financial news.